Hey guys, Max here, and this is your daily update for yesterday, the 15th of January. Of course, it was a Saturday, so markets were closed, but there is still plenty to talk about. Inflation getting worse as usual, trouble in the UK for our Prime Minister, and chaos in China, as is all too common these days. So starting off with the markets that were actually open, what happened to crypto? Well, not an awful lot to be honest. Most of the market stayed pretty consistent. Bitcoin and Ethereum didn't really move at all. Dogecoin lost 6% of its gains, while Cardano and Luna outperformed the rest of the market and rose about 8% each on some small major wins for their projects. Nothing really huge happened in the futures market. Volatility seems to be a little bit tame over this weekend, and that's probably going to continue for at least another day. Now, what has been going on though in the news? Well, inflation has reared its ugly head again, as was fully expected. The Biden administration is apparently a little bit worried about how things are progressing, which is about right. They should be worried, but unfortunately for them, the blame lies at their own feet. Of course, we got inflation data earlier in the week, and even the doctored CPI figures are now above 7%. We got consumer sentiment reports, and that data has continued to get worse as well, showing us how everyday people in America are just not confident about the economy at all. We also got some data on retail sales for December, and this was pretty damn bad too, with no holiday boost as we would normally expect. What does this all mean for Biden? Well, not much on its own, but it's these statistics which make his 33% approval rating make sense. Another poll that came out this week shows that 52% of Americans think the economy is getting worse, while only 15% think it's getting better. Now to that you might say, well, normal everyday people aren't able to predict the future any better than we are, so why would we listen what the majority has to say? And the answer to that question is because when people think the economy is getting worse, their spending habits and behaviors change, and that makes the economy worse. They spend less money on non-essentials, they put cash aside for a rainy day, and businesses do the same as well. They employ less people, they make budget cuts and the like. So when sentiment regarding the economy deteriorates, it can cause the economy itself to deteriorate as well, and that may be what's going on right now. I certainly wouldn't be surprised at all if that explained the very poor retail sales figures in December, because I personally don't believe it was all due to the Omicron variant at all. Now, another example of inflation has come out, and unfortunately, it's a pretty big expense and it's going to be sticky as well. Netflix is raising their prices from between $1 and $2 for their various plans. Now, let's be clear, this probably wasn't essential for Netflix to do. They weren't going to go bankrupt if they never raised these prices by $1 per subscription, but that doesn't mean that this isn't inflation at play. The fact is that Netflix is able to raise prices like this without losing millions of customers because of the state of inflation today. Now, the company is also seeing some pretty unimpressive growth numbers recently. They had been expecting to continue growing off into the stratosphere forever, but their customer growth has been waning, so price hikes were expected to keep their sales increasing despite that. The really important thing here, in my opinion, from a macro point of view at least, not looking at the company itself but the economy, is the fact that these prices will not go back down. There are still loads of people, especially here on YouTube, downplaying the impacts of the inflation that we're seeing, and they all point to the used car market and how once the supply side shortages work themselves out, used car prices will start to fall instead of rise, and that will reduce inflation. And the basic idea here is probably right. But there are problems with this line of thinking. The first problem is that there are a myriad of other goods and services that will never fall back down to their previous prices. Here in the UK, my barbers have increased their prices from £14 before the pandemic for a haircut to £20 today, and those prices will never come back down. Netflix is increasing their prices by $1 or $2 per subscription, and that is something that is never going to come back down. And sadly, it's the used car prices that are the outlier here, as most goods and services, most businesses providing these goods and services will be very reluctant to lower their prices in the future. Now, the second problem with that line of thinking regarding used car prices is the fact that supply chain shortages are not going to disappear within a month or two, and the people who are still claiming that they are going to have been saying the same thing for 18 months now. Take a look at how clogged up ports in the US are, and you'll see that the problems have been getting worse, not better. The ships are just now being told to anchor beyond the horizon so that they can't be seen, and so that the media has neglected to report on it all. China is shutting back down. The workshop of the world is finding itself in the midst of another pandemic, as their vaccines just don't work very well on a good day, and they're even worse against the Omicron variant. 2 major port cities in China have shut down, and plenty more cities have shut down as well. That means more delays for products from China, which we all know make up the vast majority of the things we use. These problems aren't really even in the process of resolving themselves yet, as many of them are still getting worse, and we are at least 2 years away from seeing the end of this supply chain crisis. Now, retail investors and just normal people in general are finally starting to catch on to the idea that inflation is not getting any better, and it doesn't look like it's going to get any better either, so demand for inflation-linked bonds is soaring. 2021 was the biggest year ever for inflation-linked bonds in the US, with the government selling almost $3 billion of them in the final 2 months of the year. This is despite the fact that these bonds have an interest rate of 0%, literally 0%. That means you will never beat inflation, you will only ever match it, and the reality is that because of the Fed's manipulation of the CPI data, which is used to adjust these bond yields, these bonds will also always have real negative returns. Despite that though, inflation is just so big and scary at the moment that investors are flocking to these I bonds and buying up as many as they can. Finally, the last bit today for inflation news regards Bill Ackman and the fact that he came out with a little tweet storm claiming that the Fed needs a 50 basis point interest rate hike come March in order to restore their credibility, and to be honest, I think he's pretty much bang on right here. He is of course getting flack for these comments after his whole hell is coming speech during the pandemic and the Herbalife short before that. To be honest, I think there is a lot of nuance at play here, and I've actually already written a longer form video about this topic, about his views on inflation and interest rate hikes, and I'm hoping to release that video in a few days once it's edited. So if you want more detail on that topic, then look out for that. In short though, my opinion is yes, Bill is right, we need big interest rate hikes here. There is, of course, more chaos in China, so I thought I'd give you all a quick update there. More Omicron cases keep popping up all over the country, and this is, of course, according to the CCP, who have infamously lied about the prevalence of COVID in their country since it first developed. Now, Beijing has had official cases now, which means unofficially it probably has hundreds of cases of Omicron. And this is very bad news for China, as they, of course, are about to host the Winter Olympics in about 3 weeks. Once again, if the CCP chooses to lock down the city in preparation for the Winter Olympics, then the worldwide supply chain crisis is only going to get worse. All these lockdowns are of course bad for the Chinese economy, which is already showing signs of struggling. The property market slump, as some people are calling it, I think that's being a little bit too generous to be honest, but it's really showing the weakness of the Chinese economy. Add on top of all that, the lockdowns that are going on, the people not producing goods, not getting paid, businesses not running, buildings not being built, and this all only gets worse. Now, the central bank in China, the PBOC, is moving in the opposite direction to the rest of the world by turning dovish in an attempt to stimulate the economy through liquidity injections, low interest rates, but as of yet, this hasn't proved as effective as they might have hoped. The housing market really is having a bad time of it, with house prices in the country falling for the 4th consecutive month now. Still, there will no doubt be some CCP shills in the comments down below telling me how strong the housing market is over there, despite the data, which is of course already doctored by the CCP, showing that it's really quite bad. It's of course basically impossible for us to know exactly precisely how bad it is, as is the nature of getting your data from a genocidal nationalistic regime. But when even the propaganda they're pushing is bad, you know the truth is even worse. Now, in the UK, in my country, there have been a whole bunch of scandals regarding the Prime Minister, his office, and all these parties that were going on throughout the lockdowns. The first thing to say here is that the office of the PM is in utter shambles, and there are clearly a few people, or at least one person, who wants Boris gone, as literally everything is getting leaked these days. There have been countless calls on Boris to resign, but it's all this typical mainstream media nonsense. A bunch of privately educated journalists who live in Islington claiming to speak for the rest of the country. From my point of view and from what I can tell, none of this is going to stick, and in 2 weeks it will all just be forgotten, just as all the scandals regarding the Garden Party and Barnard Castle were over the past 2 years. Keir Starmer, the leader of the opposition, is proving to be more and more pathetic each time he calls for the PM to resign, and he's just ignored. Sadly, with the state the Labour Party is in today, there is no one who could actually make a difference on the opposition there either. I do think it's important to remember that the opposition has a valuable role in the UK, and that involves keeping the government accountable for their actions. When the Labour Party is this weak and fractured and pathetic when it's run by someone like Keir Starmer, they are simply not able to carry out that role, and the Labour Party holds a fair amount of blame for their failings and the subsequent effect on the country over the past 2 years. Of course, Keir isn't watching this, but if he was, I'd simply tell him to get off his arse, put some graft in, and do your damn job, because at the moment, you're not going to be remembered at all, and that lack of legacy will be your legacy. Now, that all being said, there is some good news to come out of this party scandal nonsense, however, and it's the fact that the government is losing their authority to put people under lockdowns. The idea that if they never followed the rules, why should everyone else follow them is now becoming mainstream, and it seems to be helping getting the public used to the reality, which is that these rules never should have been put in place in the first place. Hopefully they won't come into force again either. I've still yet to hear from any of those people who are calling me an idiot and inhumane for not wanting lockdowns in December, after nothing bad really happened there in the end. They were all talk then, but now they've simply slithered off into the shadows after being proven categorically wrong. Now, there was an undersea volcanic eruption near Tonga and a subsequent tsunami, though thankfully not an awful one, and the threat seems to have passed for the most part. As of yet, it's not entirely clear what the damage is, if there's loss of life, but it does seem to be mostly material, mostly just damage to infrastructure and the like, and not people, which is of course very fortunate. There have also been a few more developments regarding Djokovic and Australia ahead of the Australian Open, and I'm probably going to try and put together a short video just looking at this issue on its own. Then the people who want to hear what I have to say about this can watch that video, and the people who don't have to, so watch out for that video coming in the next few days at some point. That is pretty much it for the day. I will see you all again tomorrow. That's going to be the last day for a few days. Again, I'm afraid I will be missing out a few days of videos this week. I appreciate everyone telling me to enjoy my holiday, but sadly, this is basically just another form of work for me, just a little bit different, and I'll be back in no time. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.